Good afternoon. This is Serge with TradeJolt.com, and today is April 15th, and I want to show you another trading opportunity. First of all, I wanted to take a long-term analysis of gold. All the money printing that's going on right now by the central banks would tell me that gold should go up in value, but I wanted to see if I got a confirmation of that on the charts. So I took another look. I had done this about a month back, and I wanted to see if anything had changed. If I go back a month back, I was saying that I believe gold was in a long-term uptrend. You see here, as price was making higher highs, so was the relative strength indicator. So this downtrend that you see here was something temporary that I felt would play itself out, and it actually did here at the second 1, 2, 3, 4, fifth wave. Here at the third wave high is where it bounced down to, found support, and started on this trend up. If you had been just using slopes, you would have gone long right about here. If you'd been doing Fibonacci's, you might have gone long right here with a very tight stop. That is a long-term prognosis. I believe we'll see a temporary peak right here. This is the previous high, and it happens to coincide with where an Elliott pattern should peak out. But that's long-term. Back in March, I took another look at it now to see if anything had changed, anything contradicted that. Let me go to the one I did today. This is weekly. Each of these candles represents 1 week. And tracing that out, I believe we have one full set of waves with 1, 2, 3 mini waves up, and that should project out to a next peak at around 188. We saw here a retracement. There's kind of an interesting, because we had expected, based on this retracement, that we would get the high right here, right at this candle. But it actually made it higher before it started its downtrend, or it overshot our expected peak. The interesting thing is, if it had peaked right here, we would have expected a retracement down to right here. And that's where we got the retracement eventually. So it's kind of interesting how that overshoot still honors the original expected drop. Anyway, it made a higher high here, telling us we're going to have another wave up. I traced from this low to this high and up from there. So this low to this high, and a mirroring of that would take it up to the 188 level. So I am bullish gold. That's my general state. So I could just place a bet to the upside. Place each of these is a week. So 1 week, 2 weeks, maybe a little down, 3 weeks, 4, 5, 6. It's kind of hard. I'd have to place it out 9 or 10 weeks out. Then from there, I examined it on a shorter, these are using daily candles, ignore the hourly, in fact. I'm going to change that, correct that, to say daily. Okay, so each of these is a daily candle. If we had traced from this high through this high, you would have seen here was a little bit of an overshoot. That's a sign that it's probably going to correct down. When you Here's a wave up, second wave up, and a third wave. We have three waves up, which is what the Elliott pattern calls for, and a slight retracement today. If you look at, if you put Fibonacci's on that, you expect your peak. Here's the first wave right here, peak. Second wave around here, and that's where we got it. And the third wave was expected here. It overshot a little bit. So now we should expect a retracement down to at least this 32% level, and then possibly a 61.8% retracement. I don't know which it will be, but I'm going to, even though I'm long-term bullish, I'm going to play a short-term trade to the downside because this is enough to make plenty of money. And I might have done that trade even if I had a longer trade, say 2 or 3 month play to the upside. All right, let's look at what we can do. Since we expect at least this level, but possibly not necessarily make it all the way down to this level, I think it's more likely to reach the 32% level where there's a lot of support here once, twice, maybe down to here. So somewhere between the 38 and a 50% retracement. That's 157, 154. That could be a target for like a candle, a calendar spread where you use time to your, as well as volatility to your benefit. I played around here a little bit and I decided to put a 156, 155, 50 spread on, where I sell one that's going to buy one, that's going to expire further out in about 10 or 12 days, and I sell one that's going to expire in 2 days. By doing that, time works a little bit in my favor. This gains more and more value as time goes by, right up till the 17th, when of course this one expires altogether and I'll probably need to close a trade. I could convert it into another type of trade, but I usually end up closing them. This shows you the price evolution of this on the 17th. It's not taking volatility into account. If I add volatility here, we're likely to see volatility increase. It will be possibly a little bit more attractive, but it's plenty attractive as it is, so I'm not even going to mess with that. So what can I lose and what can I make? This is the maximum amount I can lose, $49, which is what I would spend on one position. If it does move, as we saw here, down to a, what was the 38% retracement, down here to 157, well, I should be able to make somewhere around $130, $150. That's about a 300% of what I'm spending, and that in 2 days. If it moves down to the 50% level, that would be around 53. I would be making around $175. And if it goes all the way down to a 147 level, I will only make $25. But that's still about a 50% return in 2 days. And I do not think it's going to move any lower, but it could. And if it does, I will actually probably make about $1 on that trade, or it's a scratch. But I'm not losing any money. So that is the trade, and I will be putting it on first thing tomorrow. And I hope to get filled. I'll put a limit order of $50 and see if I get filled. If I don't get filled, I might bump my price up, risking as much as $60 or $70 in order to make, like I said, somewhere in the 130 to 160 range. That's it. If you like this video, please subscribe, get alerted when I publish more, and by all means like the video. That helps me get more visibility with YouTube and eventually more listeners. Thanks for joining me, and happy trading to everybody.